Hello everyone, this is Evan here from the Trade Risk on Wednesday, June 8th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off the video with some individual names. Before we jump into things, I just want to remind everyone, if you like the videos, please do subscribe to the YouTube channel. Bottom right-hand corner keeps you up to date with all of the latest videos that we put out. Also helps me know that you're interested, that you like the videos that we're publishing here. So if you haven't already, please do subscribe. If you have, thank you for doing so. Now, jumping into the analysis today, S&P 500 SPY ETF, we closed up 33 basis points on the day, basically right at yesterday's highs. So let's dial it back, take a look at where we started the week, and that was this candle right here. And it was a very important candle because we resolved last week's range to the upside immediately. And I think that was a good clue, some good footing to kind of kick off this week to know where the momentum was. Last week was the holiday shortened week, and we spent the entire time chopping around, very volatile, between 209 and 211, and we just kind of left and closed that week right in the middle of the range. Didn't really know it could go either way, and coming into this week, we saw the decisive resolve higher from that. Very important. Yesterday, we saw some follow through, although again, we saw the big fade off the highs, probably caught some aggressive shorts into this market, probably shook out maybe some weak longs. And then today, of course, now we rallied back to these highs. Didn't quite take them out, but closed strongly nonetheless. I think the market is doing a really good job at kind of not going up fast enough, leaving enough sort of indecision and some of these candles just like this that are sucking in those kind of aggressive shorts, those people that want to fight this market, that don't think it should be up here, and because of that, it continues to just grind higher, and we're seeing rotation amongst the sectors kind of play out. We'll get into that later, but so far everything remains intact from this breakout right here, which is what I would consider day one, of course set up by this big reversal back here in mid-May, May 19th. So we're now closing at 212.37. We're less than 0.5% away from all-time highs in the S&P 500. Now, what does that really mean? Again, nobody really knows. We could get up to the all-time highs. We could run some stops and then roll over. We could accelerate through them. We really just have to wait and see. It's just certainly a big magnet, a big level that everyone seems to be waiting on at this point. I am still in the belief that we do see new highs here sooner rather than later. What we do after we get those new highs, that, of course, is going to be of great interest to me to see how the market reacts to those new levels, to new all-time high prices, and that's something we'll be looking at closely if and when that does happen. Now, importantly, I put out a post today, which we'll cover briefly here, but you can head to thetraderisk.com to read more about it, and that's the Qs. And I think this is an interesting index right now to keep an eye on, because notice the S&P 500, if we look at this, we're trending higher. We're above the April highs here. We're at year-to-date 2016 highs. IWM, very strong. This is your leader now, above April highs, very much so, in a strong trend. Look at the nice extension away from the 8 period. Lots of momentum here in the Russell. The Qs, we're not getting that. We're actually still below the April highs, and you can see that this really isn't participating in this last 3 days so far this week, this rally that we see in the SPY and the IWM. That's not occurring here in the Qs. So we have to see now, what is this going to, how is this range going to resolve itself? If you're on the bear side and you want to see this market fail, then you're hoping that this stall out leads to a rollover and some type of lower high. On the other side of the coin, if you're in the bull camp, just know that really we haven't seen the real strong sort of participation out of the Qs, which is a heavy weighting, high beta, traditionally sector of the market that isn't performing or leading like we would want it to, or would at least like to see it. So the point is if this does start to rally and squeeze higher above these highs here, you're going to have a whole nother wave of sort of momentum, perhaps a new rotational kind of piece to the market that could take and really extend the S&P 500 and surge it to all-time highs and through all-time highs. So I think it's a very important market index to be watching right now is the Qs. keep that on your radar. That's something that I'm watching. Basically, this week's highs and then the lows from last week right here, Friday, below 109.30 starts to get, more on that pessimistic leaning. And if we can get above this week's highs and then start to challenge and take out April highs, of course, is going to be very constructive for the market. So that's the way I'm looking at it. We're still playing this with a good amount of long exposure. We've been continuing to scale out profits and rotating into new names. We did take and trim a lot of profits today and yesterday, but we did pick up a name or two. So we're sticking with the rally. Our exposure is down from 85% invested to maybe 50 or 60% at this point, but we're still sticking with it until we get a reason not to. Now, looking at some of the other major markets here, TLT, a nice kind of check back here to start the week. Basically, didn't even really fill the gap truly, but it did retest this sort of breakout level here, and now it's pushing to new highs here. So looking real good, TLT. Let's see if this trend emerges. Position I'm not in, but I do like it to the upside. I think TLT looks like the path of least resistance, clearly higher. Gold had a nice pop today, up 1.48%. You can see two big gaps now in the past week or so of trading. Last Friday, we had this big surge higher of almost 3% in gold. 2 days of tight sideways consolidation, followed by a 1.5% gap today. So quickly getting back to the top end of this range, looking very constructive. Silver, even more so, up almost 4% today. So very powerful. Even if you drill down here, you really have like an inverted head and shoulders kind of pattern, island bottom-ish pattern here. Just kind of layers on layers. But certainly looks good. Certainly looks like we got some momentum back to the upside. There's a lot of supply looking immediately left here. Got to get back above 1650, and silver looks really good, but you can see the fast-moving averages starting to sharply curl over, so you're going to see that momentum start to really push in the bulls' favor. UUP, we'll get onto the dollar now, as that had a gap down, and ever since this big loss of support, this 2450 level, which we've identified, this zone, this area, as a very important sort of reference point to be sort of bullish above, bearish beneath, is really starting to play out again. So as quick as we rallied higher through the month of May, we're even more quickly giving it back. So we'll have to see if the US dollar can get back up here and fill any of this gap, or if this is just going to completely continue to roll over with some downside momentum underneath it. Finally, USO, this one had a nice pop today, 1.72% to the upside. You're starting to get outside and almost a break of this rising wedge here. We're still long USO. We've been long it for a couple of weeks now, and we're looking for a little more acceleration. I like what I see right here, a little bit of pent up, a little bit of energy finally coming in USO. I think even if this market ultimately rolls over, which is what everyone wants to see, I think it's got a little more pain to inflict on those bears, and I think we could see another day or two of acceleration higher. We'll have to see what comes of it, but for now we're still long. UNG, we're also still long this, cooled off a bit today, but still it's performing very well recently, just kind of accelerating higher here, and the fast-moving averages are struggling to catch up with price, so things look very good USO and UNG. Now, looking at some sector-specific pieces of the market here, materials had a nice day today, and some of the underlying names underneath this, but this certainly a highlight here. We're back to new highs for 2016 in the materials, and this was after a lot of uncertainty that was built up in here. It quickly got back to new highs, extending away from the fast-moving averages. I like it. Looks like a strong sector right now. XLE, with the recent strength in oil, has been accelerating higher. You can see that's now above April highs, and all of the recent highs for 2016 looks really good there. Utilities continue to act really well. It's basing out above this base. I love these small bases over these larger bases. It's a nice looking pattern here. So XLU looks pretty good as it's trading at all-time highs. And then finally, the industrials have been acting real well recently, just the same. It's not quite taken out the April highs, or actually today it did close above them, but just getting above it right now. XLI, you can see a lot of resistance in here. This is going to be the big highs from 2015 in XLI. So let's see how it acts around this 5750 level, but certainly a sector that's been leading us recently on this most recent leg. As far as the laggards, I'd point out financials, which Again, laggards in a relative sense because they're still technically not doing a whole lot wrong. They're just a little sluggish. They're above the 8 and 20, or at least in between the 8 and 20. And importantly, they're still above this downtrend line that's extending from the highs of 2015. So I think as long as it can at least stay above, 23, 23 and a quarter, it's still kind of a neutral to perhaps a bull bias. I just don't think it's off to the races like we may want to see. Now, again, just like the technology sector, which is, again, I would point out is some of the laggards, which is basically the Qs which we were looking at. If you start to see these two sectors come alive, which have a large percentage of the overall market, then you're going to see a big surge in just the overall broad market. So keep that in mind. But financials, technology, I would say, are on the weaker side relative to the other sectors. Now, getting into some of the individual names, let's go to Google first, which had a very nice day today, up 1.6%, and it was a much needed day after 5 days down here, pulling below the 20 period. Looked a little dicey if it would stay weak any longer than that, but you could see it held on to perhaps this little trend line right here extending from the May lows or the April lows. So let's see if Google can continue to trade higher, still have this earnings gap in play, still in the middle of a range long term. So just keep an eye on where that is in the big picture. Netflix is one that did not get that saved like Google did. It actually headed lower today, down 2%. Coming into the 20 period EMA, you want to see it hold basically here, try and hold the top 30% of this leg higher from May would be ideal for the bulls, but for now we're still kind of digesting and pulling back. Again, I consider this still relatively orderly, even though today was a little bit of expansion to the downside. So let's see if the bulls can kind of step in here above this $97 level and support Netflix soon. Amazon still kind of hanging out at highs, losing a little bit of that strong momentum, but still in a very healthy trend phase above the 8 period EMA. You can't really get too upset about this one if you're long it. Still making and trading at very close to all-time highs here in Amazon. So see how that one acts heading into the rest of the week. Facebook going a little more sideways, still hasn't made a new high since its earnings release. It's just kind of consolidating sideways, holding 116, holding in the middle of this range. So again, just needs more time, still very much in a range right now, and we'll have to see how it acts going forward. Twitter really doesn't want anything to do with this strength this week. It's struggling to sort of to get going. We talked about this potential nice setup here after this big expansion higher, and then we were kind of holding up here high and tight. We're looking at 1550 or so as sort of a new trigger long here in to fill this gap, and we just haven't gotten it. We've seen the exact opposite, where we're starting to sort of roll over a bit and challenge support. So if you're a Twitter bull, you certainly would like to see maybe this line in the sand, this low here from Wednesday around 1460 hold, and then below that just becomes more of the same of sort of retesting all-time lows or trying to hold on to all-time lows, which is certainly not an ideal place to be if you're long. And then finally, Tesla is getting some momentum. Yesterday sparked a nice expansion day higher, up 5.25% yesterday, and then we saw a continuation today, a pull off the highs, but still progress nonetheless, up 1.37%. Nothing to be too concerned over. We'll have to see how this holds up next week, but so far things look pretty good after a kind of a multi-week pullback and a move sideways here through the month of May. So that's what I have for today. I hope this video helps. Hope everybody's been doing good out there on the trading front. And as mentioned earlier, if you haven't subscribed to the channel, please do so. Bottom right hand corner, I would appreciate it. Thank you guys for watching, and I will catch you next time.